we have to distinguish what is the objective. The investor has to ask himself the most important question in life from a philosophical point of view is who I am. How do I behave?
Hello, and welcome to the Market Bull Podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. Dr. Marc Faber is the editor and publisher of the Gloom, Boom, and Doom Report, an in-depth economic and financial publication which highlights unusual investment opportunities across the globe. Marc talked about his rich history in investing across the world and why he has made a continuous effort to look for investments in undervalued markets. Marc talked about the current economic and political environments globally and what he sees unfolding in 2024. Marc pointed to where he sees values and how he developed his investment philosophy. Here is Marc Faber. So, hello, I'm Ben Kostrich, and this is the Market Bull Podcast. Joining me today, I'm very excited, is Dr. Marc Faber, the editor and publisher of the Gloom, Boom, and Doom Report. It's an in-depth economic and financial publication, and we'll talk about it, but highlighting unusual investment opportunities. I'm sure we'll delve into that later, but welcome to the show, Marc.
Well, thank you very much for having me, and I look forward to share some of my views with your listeners and viewers. And a happy new year to all of
Yes,
them.
of course. Well, the markets haven't really stopped. There's been a fair bit of activity already across the board, and we'll delve into, well, really, as we're speaking, you're in Thailand, and we were just discussing your routine as, well, I guess out of the ordinary for most sort of investors living in Thailand. But your history and background, delving into why you started and almost your interest in building your career in this side of the world. Where did you start and how did you navigate through the, well, almost 50 years of investment experience?
Yes, actually, it's more than 50 years. But
More than 50, yes.
I was born in Switzerland and grew up in Switzerland, in Geneva and Zurich. And then I studied in London, partly at the London School of Economics, and finished my PhD at the time. And then I was looking for a job and I didn't know what to do. But in those days, it was relatively easy to find a job for someone who had studied and who had a doctor title and who spoke several languages. So I got a job in New York with White Weld and Company. This was a large investment bank. And I started in 1970 there. And in 73, White Weld said, well, we want someone to build up our business in Asia, focusing on Japan. So they sent me to Hong Kong, and then I was working out of Hong Kong, but covering the region. And then in 78, White Weld merged with Merrill Lynch. And I don't think that Merrill Lynch particularly wanted me to be working for them. And I didn't want to work for Merrill Lynch for a variety of reasons, not because the firm wasn't very good, but I opened then the offices of Drexel Burnham Lambert, which was a specialist in commodities and famous for its trading of junk bonds, high yield bonds. And then in 1990, the firm essentially folded. It went out of business for liquidity problems. And I then started my own business in Hong Kong, which I ran out of Hong Kong until 2000. And then I decided, because I was traveling so much, that I didn't need to live in Hong Kong. And we had bought a property during the Asian crisis in 1997 in Thailand. And so I moved to Thailand and I traveled about 80% of the time for a while until COVID. And now, during COVID, I didn't like to travel much because I never believed in this vaccine bullshit. And so now I can travel again, but my appetite to travel is reduced because I have a very nice life. And as you can see, instead of going to a studio we can do the same through Zoom or Microsoft Team or whatever. And this is a huge advantage for me and for many other people, that they can talk to each other without being close, uh, without having to uh,
Be in the same
endure the
room.
inconvenience to go through custom officers and immigration idiots and so forth and so on.
Yeah. Well, I mean, on a side note, yeah, airport travel is still a bit of a kerfuffle these days, trying to get through it all. But that's a different subject altogether. But I mean, throughout your time, you've been almost
Uh,
all across the world with a focus on,
yeah.
you could say, Asia, and you really highlight in your, I guess, underinvested or opportunity markets. And your strategy and the way that it's evolved throughout the years, I mean, was there certain experiences or exposure to markets that really, I guess, molded you into this formation as, you'd say, contrarian and arguably what you're looking at, traditional, well, not traditional, but your everyday investor might not even consider them?
Well, before I finished my studies, a few months before, I had the view that I wanted to essentially travel around the world. And I had accumulated some money during my studies because I was in the ski team of Switzerland. And during ski racing times, we earned some money. I mean, not much. But anyway, I put all my money into two stocks. I thought either they double and I go and travel around the world, or I go and work. The result was I went to work right away because
Quick
I thought,
lesson.
because the US market, the typical speculative stock, had peaked out in 68. But by 1969 and 1970, they were very low. They had gone down by 90%. In this case, I bought Lytton and Penn Central. And within 6 months, after declining 90%, they declined another 90%. So I went to work. Actually, Penn Central went bust, but Lytton then went down another 90% to about $2. And then it turned around in after 1970 and 74 and went up strongly. But this is the stock market. The fact that something goes down 90% doesn't mean that it's cheap. It may have been dramatically expensive before.
No, very, very true. And I mean, with that, those sorts of moments, did you then start realizing that you were, I guess, growing or finding an appetite for certain sort of development or investment vehicles? And I mean, your outlook, how did that sort of adjust to start looking at, Asia or, as you said earlier, maybe Australia, and just this global outlook that even me thinking about it now, it would have been, well, these days it's very easy to buy and sell any sort of asset across the world in a way. But, 20, 30 years ago would have been a very different ballpark. So all of
Yeah.
those factors that have, I guess, improved, and how have you found all that sort of evolved and changed?
Well, I was always interested in two things, kind of results of races. Like I followed very closely the bicycle races in Europe, like the Tour de France and
Mm,
the Giro d'Italia and the Vuelta in Spain. And I was always fascinated by the ranking of the racers. So I had a feeling for figures, uh, or an interest in figures. And two, I had become interested through my thesis, but already before I studied I enjoyed history, but through my studies, which was about the financial reform of Sir Robert Peel. He was a British prime minister between, I think, 1842 and 1846. And and his great merit was to take Britain from a system of protectionism to free trade under the influence of the free traders like Richard Cobden. And his great merit was to abolish the Corn Laws and the Navigation Act and introduce as a permanent measure an income tax, which was at the
Hmm.
time fixed at 7% of incomes. And there were maybe only 5,000 people in the British Empire that paid this tax. So certainly they didn't pay much. And it was a minor source of income. But it was the start of income taxes around the world. And I'd like to say here right away, it's interesting that the 19th century, which was an incredible century of progress in science, in industrial production, in the inventions, and so forth and so on, the governments of the world in Europe and in America, none had tax revenues of more than 12% of GDP. 12%. In other words, the governments were small and the private sector was big. And what has happened since the introduction of central banks in 1912 is the government has grown like a cancer and destroyed the private sector and its initiative, or made it difficult for businessmen to operate. And that's why we have relatively poor economic growth compared to the 19th century. And the other great occurrence of the 19th century is that all this growth occurred without central banks. It's a complete nonsense. Tell the public that central banks have helped economic growth. They have retarded economic growth because they're a tool of the socialists and of the imperialists and of the interventionists. Without high tax revenues, without high government expenditures and an enlarged government, the personal freedom of people would be much higher than what we have today. We have dictatorial governments in your country, Australia, especially, to lock up people the way they did
Yes.
it.
Yeah, and
I
that is
have
almost a
great
distant memory
sympathy.
for many. Yeah.
Yes, I have great sympathy for all the people that have the courage to go and demonstrate against the despotic government and incompetent government. That is adds to it.
Mm. No, it was a fascinating time, and it is it's scary to think that it all really unraveled, 4 years ago, and for many, it's almost a distant memory, and there's still, I guess, pockets of communities that are infatuated with it. But I can already see here this has really been almost a driving force behind, well, where your outlook or opportunities from investing has been going. And at the beginning, I alluded to your I guess
Yes,
your statement on the gloom doom about unusual investment opportunities
yes.
around the world. And I mean, unpacking that for many reading that, you'd sort of it's a good hint. What does that actually mean? And more so, I mean, where have you been really prioritizing your investment outlook and opportunities?
Well, you go through life, and throughout your life, there are a lot of variations in the investment opportunities. So when I started in 1970, uh, 10 years, US government bonds were yielding, say, around 6%. And then we had a period of accelerating inflation. And during this period of accelerating inflation, we had the outperformance of energy stocks and mining stocks, with the result that by 1980, 81, the energy sector made up for something like 35% of the S&P 500 in the US. So we have the first 10 years, high inflation, accelerating inflation, and also a period of rapid interest rate increases, whereby interest rates already in 1969, when inflation was about the same as it's been now in 2022. But at that time, the 10 years reached already over 9% yield. And then we dropped into 1974 and into 1973. And then we rose again sharply until 74, when the yield on the 10 years was 12%. But inflation wasn't any higher than it's been recently. In other words, we have waves of inflation, rising inflation, then it cools down and then it takes off again. And it would be wrong to assume that the bulk of the existing inflation we have now in the system is already over. It could be under some conditions, but it could also be just a temporary relief before inflation accelerates again. It's a monetary phenomenon, and it has to do with fiscal deficits. You will not get inflation when you have a balanced budget. In other words, when the government every year collects the tax it needs to expend. You would also have no wars if people had to pay for the wars. But the government borrows money, so the public doesn't really see it. Inflation is a tax. It is a very vicious tax because it hits some classes of society much harder than other classes of societies.
Yeah,
Anyway,
it's
in the 80s, we had the rules of the investment game changing. In 1970, gold was $35 an ounce. The peak in 1980 was $850. Silver went from something like $2 to $50 in a short squeeze. And I was there involved in this wave of speculation. Our office in Hong Kong, we had a visitors gallery where the speculators would come in at night with the nightclub hostesses and trade gold and silver.
far out.
Yeah. And then the rules of the game changed. After 1980, we had a period of disinflation. In other words, we didn't have deflation with prices coming down, but the rate of inflation slowed down. And we entered a period of essentially 40 years during which interest rates and inflation came down. And in the US, they bottomed out in May 2020. And after that, we are now again, in my view, in a period of rising inflation and rising interest rate. But these are long cycles, you understand? And then the other major feature of the 1980s was the financialization of the world. In other words, financial markets became much bigger than the economy because they were expanding and expanding because of money printing. And a further very important feature was that when I went to Hong Kong in 73, we were eager to get rich people in Asia to invest in the US and to buy US bonds and to develop business with financial institutions. My first client in Australia was Commonwealth Mining. They had a beautiful building in Sydney on the harbour. And Friedman was running it. Friedman. And we became friends. And then I witnessed the rise of BT Australia. Chris Corrigan is a good friend, and Olive Brown and so forth. So I know Australia very well. And then I discovered that many wealthy Australians wanted to have money outside Australia for tax reasons. And so I developed a private business also. But in the early 80s, it occurred to me that many emerging markets in Asia, Philippines, and Hong Kong also, because we had a slump in the real estate market after 1980, and Singapore and Thailand and so forth, and also Taiwan, South Korea, they were very cheap compared to Japanese stocks. So I tried to get American institutions and European institutions to invest in Asia, which was partially successful. And by 86, I noticed that Asia was expensive, but because I had read a very important book, The Economics of Inflation, I discovered that Argentina, Brazil, and Peru and also Colombia were very inexpensive, these markets. I traveled to Argentina. The whole stock market was worth $500 million. Then, and then I started to invest in Argentina and in Chile and in Brazil. And I wrote about this. And that when barons in America, this financial paper, became interested in me because I had discovered these Latin American markets. And so what I want to say is that when you're born and when you start to work, there is one sector of the world that will do well. When I started to work, Japan was rising and the stock market rose until 89. But after that, it went to sleep or into bear market. But more recently, after 1990, Chinese stocks became kind of the hot commodity. And then they went ballistic. And the Nasdaq, of course, until the year 2000. And now in the last few years, the FANG and FANG-related stocks, the Magnificent Seven. So each period has a different characteristic. And this, I think, is a very fascinating feature of being involved in financial markets because it's never the same. If you are, say, a carpenter, you can use your technology or your knowledge more or less the same way for ages. But in financial markets, everything changes rapidly all the time. And you have to focus on different sectors from time to time. And this keeps you essentially always on your guards. I wouldn't say it keeps you young because I also, it's a very, if you're interested in history, if you're interested, some people are less fascinated, but I'm fascinated by price movements. The price of gold goes up or the price of cocoa. It's interesting in the 70s. The first commodities to peak out were wheat, corn, soybeans in 1973. And then in 77, there was a huge boom in cocoa and in coffee. They collapsed. And then the precious metals and oil continued to go up until 1980. So even in an inflationary time, you can have assets that go down. That many people don't understand because inflation doesn't lift all prices equally. It lifts here, then here, and so forth. So this is essentially the, what I experienced. And I mean, it's been a very interesting time and fascinating time. And I've seen the whole world because I traveled to all these emerging economies.
And when you're talking about investing, I always find it interesting to break down. You mentioned there, it could be a stock, for example, or it could be a commodity, but it could be a physical, buying and selling coffee beans or wool or whatever. So when you're talking about that and real estate, of course, and property, I mean, the investment portfolio, I mean, nowadays, your modern sort of approach or outlook, I mean, have you got some sort of divergence across, holding physical currency or gold versus investing in property versus, trading coffee beans, for example, because all of these are encapsulating investing. And I'd be interested to hear your thoughts on crypto as well as a new emerging, something as an everyday investor should be at least monitoring because there's been some interesting, I guess, developments in that space. But where do you sort of compile a lot of your investment decisions or areas that you look at? Or do you, as you said, follow the seasonality components, the charts, the graphs, and reflect on what's happened in history? Because typically us humans are pretty good at repeating it.
Yes, we are experts at making the same mistakes. But I think we have to distinguish what is the objective. The investor has to ask himself the most important question in life from a philosophical point of view is who I am. How do I behave? I'm impulsive, I'm passionate, or I'm more balanced, and I am willing to take risks. If you're
Mm.
like, I still ride racing bikes, And in Thailand, to drive motorcycles of any size, it's dangerous.
Yeah,
Yeah,
that's an adventure in
you have,
itself, isn't it?
you have to be an optimist to drive to sit on a motorcycle in Thailand. But anyway, uh, some people are risk averse. I mean, I've seen it with my clients. You could explain to someone the situation that look attractive, and he wouldn't do it. And I had a very nice client. I have to say, he was impulsive. Kerry Packer, he would take any risk. For money, he wouldn't take any risk. And if he lost, he cursed you for an evening. And the next day, he was again very nice on the telephone. But uh, I enjoyed working with him because he was a tycoon, someone who had the guts, and he did uh, take his responsibility. You understand? Nowadays, you look at the CEOs; they're all vokes. They go with the stream. They support socialists like the BLM movement and so forth. They're crazy. They're crazy. They have no personality. They're afraid to lose their jobs. That is something in life you should never be afraid of, to lose your job, because one door closes, another one opens up. Uh, the point is, I have some investments and some trades of taking risks, whereby we then need to later on discuss the risk taking. And then I'm very conscious about, you know, at my age, it would be difficult for me to do a manual job like being a waiter or a construction worker, because physically you're not as fit as when you're 30 years old or 25. Or and so I have some investments that I perceive to be relatively safe. But this is my perception. Maybe someone else would say, "Look, Mark, you have properties in Vietnam; they're not safe." But then I could turn around and say, well, I have properties in Switzerland and in Germany, and they're not safe either, because the government can take it away from you, or they can tax it away from you. They've done that all the time throughout history. So when I grew up in the 50s, it was safe to put money in a bank on deposit. My grandparents always said, Mark, you have to earn money, and 10% of your income you have to save in a bank. Put the money in a bank. My grandparents, they owned some shares in air cables because they were pioneers, winter sport industry. They had built a hotel in the mountains. But what was safe then, to have money on deposit in a bank, is nowadays no longer safe. You know, I mean, we had so many examples in Cyprus. The deposits were all declared worthless, except some insiders.
Mm.
And uh, the deposit was then paid back $100,000 each, irrespective whether you had $20 million or 200,000. So nothing is safe. Gold, in principle, should be safe, but the government can take it away. And I'm especially afraid of the bureaucracies we have today, because they can do anything and nobody ever gets punished. They get rewarded. Just look at who is the president of the uh, EU, Ursula von der Leyen, someone who is completely incompetent, was shot upstairs.
Mm.
Similar for Habeck, similar for Baerbock. All these characters, they are incompetent to the extreme, but because they were inconvenient as through their incompetence, they were shot upstairs. This is the difference between the private sector and the government. In general, in the private sectors, and certainly in China, capable people come to the top. But in government, the most incompetent people climb.
Interesting. So then, presenting that point of view and I guess that outlook and like it there's no denying that government sizes have increased and bureaucracy and red tape has definitely emerged. But I always look to people and individuals always innovating and finding, I guess, ways to innovate and think outside of the box, so to speak. So with that outlook, where do you see the opportunities or the optimist side of it? Because with that sort of outlook and I guess the trajectory, you would assume that, and it's thrown around a lot, a centralized digital bank currency, which would be a terrifying reality. And I know there's, talks of that, and it's amazing how, everyone can have different opinions on it, but there's definitely sorts of scary implications of it. But if, pursuing that trajectory, I mean, where can you see, I guess, the potential turning point or realization, sort of adjusting that course of action or that path?
Well, my view would be that we will have continuous tendency to the left because governments uh, they have to justify their existence by interventions. I believe the best government is the one that does the least. In other words, it reduces regulation and reduces the number of laws. And there are some disadvantages involved with that, but the advantage is the economy becomes freer. Just consider it. There are some countries where someone can just open a small restaurant and he just has to get the license and that's it. The restaurant may not have the toilets of the standard of Australia and of Europe and no special toilets for people in wheelchairs and so forth. But at the same time, the guy who has the initiative to open the restaurant, he can do it. Now, I've seen that with friends of mine who opened. My wife had a restaurant in Hong Kong, a Thai restaurant, because she's Thai. Uh, I've seen it. The regulation is such that there is this office of the government that will come and check the sanitary installations, and the police of the firemen comes and checks this, and the people of hygiene come and checks that, and so forth. In Western countries and in America, it's very difficult to open a restaurant for a normal person because I want to explain that this regulation is actually encouraged by big corporations. Starbucks, as an example, they open a new store. They have their own engineer. He comes, he knows exactly what the regulation is.
Mm,
And then they have their own lawyer. He knows exactly what the legal situation is in Australia. And then they have their uh, accountant and their all kinds of experts. You understand? They first of all they know the government officials already. They know to which office to go, and they also know who to bribe. This is very
mm,
important in life because the beauty of socialism, if there is any beauty, is that the socialists can easily be bribed. They take they do anything for money. Someone who is in the private sector knows that essentially corruption is not particularly desirable in an economic system. So he's sort of trying to do his best or compete based on his ability to manage a business and on innovation and on efficiency. This is different with the socialist. He doesn't think that way. He thinks everybody should be the same, so nobody works.
mm.
So this is a very important point. The more regulation you have, the less dynamic the system becomes. In this respect, I just want to tell you, I was born in 46 and already in the mid 50s, my mother took us children, my brother and me, to Yugoslavia. This was a communist country at the time run by Tito. I have a picture of him up here. So anyway, uh, I saw as a child already how low the standards of living was in Yugoslavia. At that time, it was still one country. And later on, when I was ski racing, I went frequently to Eastern Europe and I saw how low the standards of living of people in Eastern Europe was. I mean, you could cross the border and see it with your own eyes, how depressed people were and in what kind of a poverty they live compared to the Western world. And you can see it yourself in statistics. How many Westerners were fleeing to Eastern Europe? None. How many Eastern Europe were fleeing to the West? Notably, how many Germans from Eastern Europe fled to Western Germany? Countless people. Anyway, the moment these economies, Russia, and that the first time I went to Russia was in 1980, but then they opened up after the Berlin Wall fell. Then Russia, there was a boom. First a depression for 2 years, and then a boom. And we had one of the first Russian funds, my partners and I, the Firebird Fund, which did very well in the 1990s. And then China opened up in 1978. And the first 10 years were difficult. I mean, the exports went up and cities developed, mostly Pearl River Delta. But when the whole country grew very rapidly in the 1990s and after 2000. So the one thing I can say to be optimistic, when I look at poor countries and the countries adopted the capitalistic system, everybody became wealthier and everybody increased his position in society and his standard of living. Now, I'm not saying that they all grew and developed at the same rate. You know, it's like a horse race. The capable horses run faster than the incapable ones. It's always in a free society. Capable people move ahead more rapidly than incapable people. But everybody's standards of living is lifted by the capable people. And this is something that has encouraged me in the world, say, to see how poor people became not rich in per capita income like the typical Australian, typical Swiss or American, but compared to what they were before, their lives have improved dramatically. And what do the Western governments do against leaders who have brought up their societies to a high standard of living? A good example is Lee Kuan Yew. The Americans bitched all the time about him because he was kind of a benevolent dictator. But Singapore was relatively free. And he lifted the standards of living. It's one of the richest cities in the world. They also hate, but they can't say it, they hate the Sultan of Dubai because it's not a democracy. It's the proof that a dictator, a ruler, a monarch can bring up a country to extreme success alone without this democratic nonsense.
Interesting. No, the rise of
And
both those countries.
Modi in India, he did in 8 years, now 7.5 years more than the whole Gandhi clan before him. But the Gandhi clan bought American politicians, so they all applauded. But Modi has his own personality. And then a British foreign minister who became prime minister later, Liz Truss, went to India to teach the Indians what to do and how to behave. India has now overtaken Britain in terms of size of the economy. And do you think the British can go to China and start an opium war nowadays? It's laughable. It's laughable. China has 28% of global industrial production, much bigger than the US. They produce as much cement as the rest of the world combined. If I were Australia, I would be friendly with China and not with the US.
Yeah, it does flash me back to the COVID time with some interesting things, and the geopolitical landscape, of course, is well, very interesting at the moment, and a lot of it always ramps up when election cycles are on. And I have a sneaking assumption that with the US in particular, with that election cycle, it's going to be a very interesting next period of time. But as we're talking of time, you're constantly, I guess, covering markets, and of course the gloom, boom, and doom report. You've been doing that for a fair amount of time. When you've been doing that, or why did you start it, and what is in it, and how can, I guess, listeners or viewers follow it and get engaged with, I guess, your commentary and your wealth of knowledge about, economics and political points, and clearly from the background a fair bit of reading as well.
And they should listen to your podcast. No, I mean, when I started to work for Wall Street, believe me, because we had fixed foreign exchange rates in 1970, that Nixon went off the gold standard and the Bretton Woods Agreement in August 71. But we in Europe, we were familiar with fluctuating currencies, but Americans didn't. For them, the dollar was the dollar. That's it. And so I thought I start to write my own reports while at White Wealth already after 1970. And I went to make presentation to Japanese institutions and to wealthy people in Asia to show that, I know something and I'm involved in economics. And Asians, they value education highly. And so uh, with my own reports, I got an audience of people who listened to me. Of course, they also read the research by Whitewell and by Drexel Burnham later on and so forth. But Drexel was always bullish. You understand? Always. And our strategist became then the chief strategist of Goldman Sachs. She was bullish all the time. Never. And I thought stocks move up and move down and currency move up and down and so forth. So I tried to be more market sensitive. And I predicted at the time crash in 87. It was coincidence that it happened. Uh, but Japan, I also predicted that Japan would collapse. And I won bets because I said Japan in 89 would drop by 50% minimum. My expectation was exceeded. It dropped by more than 75%. But so I discovered sectors that were the most popular, that these sectors would eventually go down the most. It's like the dot-com bubble.
Mm.
And I think FANG-related stocks. And by the way, about the dot-com bubble, I remember I was invited by the Australian Broadcasting Corp to debate a portfolio manager who was at the time at BT Australia. And he told the audience how great the company Cisco was and that it would grow forever and that they controlled the server market and this and that and so forth. And I said, it's possible that Cisco will continue to grow, but it doesn't mean that the stock will go up because I've seen it in 73. The most popular stocks in 73 in America were companies like Xerox, Kodak, Polaroid. Look where these stocks are today.
Mm.
And then another group of popular stocks were Levitt's Furniture, Sears, Kresge, and so forth. Very few of these companies have survived. Few. And not, the big success in technology were all companies, with the exception of Apple and Amazon, that were actually listed after year 2000. These are new companies, Facebook, Google, uh, and so forth. And so that's what I'm saying. The rules of the game change occasionally. It's like a casino.
Mm.
If a gambler wins a lot, they'll kick him out.
Yeah. House always wins.
Yes.
No, fascinating. And Yeah, of course. I mean, it's a publication, of people can subscribe, but I mean, what do you cover a lot of things, and is it a monthly or a weekly? I mean, how can people actually engage with the newsletter that you've got?
First of all, it's an educational letter. If someone has no time, he shouldn't read it because he should look up things I discuss because occasionally I discuss historical events, partly because I'm interested in history, partly because now I'm studying the history of Rome for the third time in my life. The first time I hated it because I was at school and I hated school or couldn't stand school, although I finished. But and now I have time to do it and I do it leisurely. Like when I wake up in the morning, I listen to podcasts about the Roman emperors and so forth. There's some very good Roman history, and it's so great to listen to the history. But then you have to look it up yourself in books, the details. And it's remarkable how empires' history have changed little since those days. Because a common feature in empires is always how do you manage it? It's very difficult how do you manage the succession? Now, in modern democracy, the succession is through the voting process and so forth. But you can debate whether we have uh, regular elections or whether they're influenced by money and this and that. Anyway, and then most empires actually went down the drains eventually because of a lack of money. They ran out of money. And it's interesting, the Roman Empire expanded because initially all the new territories they conquered were profitable. There was gold and silver in these regions, and trade flourished and so was. But eventually, other countries came up. It's like an athlete. Djokovic is the best tennis player that has ever existed. The Australians didn't want to have him because the Americans called Australian Prime Minister and said, "Don't let someone in without the vaccine." It's ridiculous. This is precisely what I talked to you about at the beginning.
Mm,
Some bureaucrats acted in the way that people of Australia didn't want. The ordinary Australian was all for him to come to Australia, but the government wanted to show their power. They behaved worse than any royalty ever behaved throughout history. Really, I mean, this upsets me very badly that these government officials, without any qualification, without any knowledge or medical knowledge, impose lockdowns on ordinary citizens and portray them as if they were idiots that didn't want to take the vaccine.
mm.
That is the worst part.
Yeah,
Anyway,
yeah.
uh, all I want to say is he will also go down one day because others are becoming better. And I was in ski racing, and you can see it. Suddenly, someone improves or is younger and is fitter than you, and this is more than you do. He becomes better. So uh, this is economic life. Is luckily this is what we want. Change that new people come up, like the Chinese have become an industrial power. They became an industrial power within the shortest period ever in history. And that
Mm,
gives rise to tensions because the existing power, the US, doesn't want another power to come up. The ordinary American, he doesn't care. But the neocons in the State departments, who are all criminals, they support wars, they lead to wars. These people cannot accept that the country is successful and not dominated by the US.
mm. Well, I can imagine that as you said, you probably had a fair few followers and probably people, and I love this sort of ability to speak freely and have these conversations because really that's why podcasting is thriving because it gives this exact opportunity to be free and passionate and emotive. And that's what's beautiful about it. And as we said, we're doing this from me sitting somewhere in Perth and you sitting somewhere in Thailand. But no, I appreciate you taking the time to speak with me on the show, Mark. I know you're going to have a fairly long, the usual routine of now of monitoring markets. But yeah, I'm looking forward to having you back on to see, if we are learning our lessons, if we are
See the
changing our
results.
ways. Yeah, seeing what's unfolding. But yeah, thank you so much for speaking on the show with me
My
today.
pleasure. Thank you, Ben. Take care. And to all your viewers, all the best.
Thanks for listening to the Market Bull podcast. If you enjoyed it, please make sure to like and subscribe. You can follow the Market Bull on our socials at Twitter and LinkedIn by searching The Market Bull. You can also subscribe to our newsletter on the website by visiting www.themarketbull.com.au.